Hey everyone, my name is Jason Brown, managing partner with PGP Advisory Services. We are an advisory services firm based out of San Antonio, Texas, and we help business owners unlock value for their business by preparing for and successfully exiting the business. And we all know that really an important piece of our business is understanding our customers. And in this sale process, customer is the buyer. So we're fortunate today to have an opportunity to get a perspective on the business through the customer's lens in the form of a buyer. Today, we have BJ Jacobs, who is the managing principal at Goshen Park Capital, here to share a little bit about his experiences in the acquisition process. So BJ, if you'd like to go ahead and introduce yourself, tell us a little about your background, that would be really helpful.
Sounds great. Thank you, Jason. Thank you for the introduction. I am Managing Principal at Goshen Park Capital, which is an operationally focused group, equity group. We call ourselves a search fund, but we are comprised of a group of investors, operators, and professionals who have done this a few times, although we are looking for a single lower middle market business south of $50 million in revenue to go in and put boots in the ground, operate, and continue the legacy of that business owner, primarily family owners, founder owners, but we're looking nationwide. So that's Goshen Park. And prior to launching Goshen Park in 2018, I spent about 10 years in the professional services world, helping really large law firms get better at being profitable, delivering value to their clients, and basically started 3 profitability, pricing, and legal project management teams in those firms that did not have it. So in about 10 years, that discipline really evolved in the legal space, and now is not just a buzzword, but a core value creator for the legal community.
Okay, so what led you going from the legal world to wanting to start your own business? What kind of prompted you to make that jump?
Yeah, well, I think my first job out of college was actually pretty entrepreneurial. I was a financial advisor, so I think that itch was never fully scratched. I spent about 3 years, had a business partner. We built a book of business, and I learned I wanted to. I enjoyed selling. It was probably the best role for me out of school, just learn how to sell myself.
Right.
But I felt a need to really understand sort of fundamental business, disciplines. I wanted to learn how to operate a business. I wanted to learn, about actual finance, how corporate finance meant.
Right.
And so after a couple of stops and obviously spending a decade in the law firm and understanding how to operate a really large business, I wanted to get back to that, and always felt like I could operate a business that was already going and had momentum better than starting from scratch.
Absolutely.
Didn't have any bright startup ideas, but knew that I wanted to create value for myself in the same way that I was creating value for an organization. So I think it was just a combination of sort of personal needs and professional wants, and really what my skill set was in operating a business, getting my sleeves rolled, rolling up the sleeves and getting on the ground and building teams and working with fantastic people is really why I wanted to start Goshen Park and hope of operating a great company.
Excellent. And so with that perspective, if you can share a little bit about the acquisition process and kind of how you're going about finding the right business for you, that would be helpful.
Certainly. So I spend most of my days having one-on-one conversations with business owners, typically, like I said, family-owned businesses, founder-led businesses where, they're deeply involved in the business still. And it's typically a very industry-focused approach. So I myself and my team do a lot of research on particular industries that we find attractive, that have really good macro wins, really good tailwinds, and frankly, in this environment, have a lot of, I'd say, operating advantages to having workers working remotely if they can.
Right.
I typically end up, like I said, spending, anywhere from, 40 to 45 minutes having a first conversation with an owner, or sometimes shorter, just trying to understand what their needs are, if they're interested, and bringing on a growth partner or potentially exiting the business, trying to really understand if they're, a deep management bench, if they have kids in the business, what that looks like, just trying to understand the story, right?
Right,
A lot of it is just understanding people. And I really enjoy just learning about how these highly entrepreneurial people and minds started these entities. So I sort of take that as personal enjoyment. Typically after that first conversation, if they're interested in moving forward, and I find that the industry is interesting, the company is the right size and scale, typically we end up having a few conversations about size, financials, growth. Obviously, very protective of that information.
yeah,
Sometimes sign an NDA if they need to, but then if we like it, we'll go ahead and make an offer on the business. And it's really not a long, drawn out process, and it's designed that way because I've done a lot of research on the industry already. Right.
right.
So really looking for maybe 4 or 5 key bets on the industry as well as the company. And if those things prove out, we can move pretty quickly through, anywhere from 90 days to closing the business and being on the ground, 3 months later.
Nice, nice. So walk us through maybe an example of an industry you're looking at, and then maybe talking through, right? Because there's going to be sellers viewing this, and so again, helping them frame where does their business fit and how attractive their business might be relative to other opportunities. If you can walk us through what are those characteristics that you're looking at from an operator's perspective in the business to determine whether or not that business is attractive. And so an example might be helpful to kind of crystallize this in the minds of our owners.
Yep. So something that I personally find attractive. Again, a lot of these macro trends are just sort of, hey, what do I like? What do I think is interesting? But also what's happening in the world. Something we're looking into is the geospatial industry. So think geographic information systems, location analytics, and business intelligence. And there's a number of verticals. I know insurance is a big one, insurtech. We actually are looking at retail plays, which you think is sort of an interesting place to look, since there are a lot of entities that are not getting as much traffic and visitors right now.
Right.
But I think retailers are trying to understand, and have always been trying to understand, where their customers are coming from, how they're interacting in their stores, where are they, how can we reach them, what sort of marketing works best, so it's very targeted.
Yep.
And it typically takes the best solutions right now in the last probably 5 to 10 years have come from individuals who have likely started with a geography degree and have taken that and ridden the digital transformation forward and understood what information systems and how important they are, and have a specialty around geographic information systems and location intelligence, right? So they've started many companies that are typically asset light, that have proprietary software that serve a particular business use case. Like, for instance, one we were looking at is a banking site selection solution. Another one is a retail solution for small and medium businesses, right? So very typically the companies we're looking for have very good understanding of product market fit. They have strong engineering teams already in place that may have only one product, and they may be working on a product set. But these are obviously businesses that don't require people to be sitting next to each other to have success. So that's something that's very important to us. as well as recurring revenue dynamics, right? Where their customers are coming back to them again and again, either paying, quarterly, monthly, yearly subscription or non-subscription, but it's something that is ongoing and highly critical to their business. So product criticality is something that we're also highly focused on. And then, of course, the industry growth, and something that is something we try to understand is how the end customer market is growing, not
Right.
just who they're selling to, but who they're selling to is selling to. So typically, these are business to business plays where the ultimate end customer market, there's a new use case coming about, there's a new customer set that are using the information or knowledge or product, and we want to make sure that we're positioned in the right place in the value chain to capture that growth.
Quick question on that. So how do you, or what do you find as you're talking to owners there, right? Like, so we just for the audience's perspective, BJ and I both went to business school together at Michigan Ross. And so we bring a similar skill set to the table. And owners come from a lot of different backgrounds and have a lot of different experiences. As you're going through and having these conversations and at least thinking through dynamics like recurring revenue, criticality of revenue, those terms might not resonate with owners out there. What do you find in terms of how owners are thinking about these same topics that you're describing, and what can they be doing to help strengthen the revenue streams that they have to make it more attractive to buyers?
It's funny you say you're right. In most cases, the verbiage might be different, but the intuition is there. Right?
Right,
It's
right.
about how many times I hear that business owners try to find more ways to entrench themselves within the core customers. So if they
Right.
can, deliver not just on one piece of a product, but also deliver some services, some wraparound services around that product, that is one way. If the product is focused on, an area of revenue generation for their customer, that is something that is highly critical in nature, and that their customer ultimately needs to operate as well.
Right.
So those are it's pretty interesting how intuitive many of the business owners are, but it's not complicated stuff. It's
Right.
really about standing out and being important to your customer, and I think most business owners understand that.
Right. And what do you find are the ways that they go about doing this? Part of what we want to do is make sure that we leave the owners who may not be at that point, right? Who don't have that level of relationship, that depth of relationship, and they may see and understand it. What do you see business owners who do this well? What do they do to get to that point where they've got that type of quality of revenue stream that's going to be attractive to a buyer?
The qualities that I see is that it's typically a business owner who has been successful, or at least is thinking in that direction, or they're constantly talking with their customers. They're spending less time, in the business, so to speak, doing something tactical and operational. They're spending more time visiting customers, talking to them, having conversations via Zoom, and asking questions about how they can be more impactful with their work. Or it may even just be piloting and experimenting with the feedback that they receive from customers and developing new products. So it takes a little bit of additional work beyond, the making sure that all the trains are running on time, and that your team is highly motivated, but it's really asking interesting questions about what your customers' needs are, and even what their customers' needs are,
Right.
so you can try to see around a few corners, if you will, so that you can ensure that you're not just delivering value to your clients, but that they are able to continue delivering value in a way that's sustainable.
Nice, nice. And so a key enabler to that seems to be the team, right? If you're going to be outside taking care of the customer, somebody needs to be at home making sure that the operation is running correctly. And talk a little bit about the team and how you view the team and where that fits into your assessment of a business and the attractiveness of that business.
Yeah, the team is something that I put pretty high in terms of ranking. Whether I like an opportunity, it's something I say to myself every day. I want to find a fantastic team, and really, what that boils down to me is that there's a management muscle there, and it's typically, if not, one or two, you know, individuals who could step into the role but may be missing a couple things in their skills toolbox. Is typically they think a lot like the owner.
Mhm.
They may have the owner's ear, and maybe they have a functional expertise in a specific area, but maybe haven't built out the processes or systems around like sales operations, right? They may be really great salespeople. They may be, in some cases, able to train a few salespeople behind them, but they don't have a sales ops process where anyone that has a capability in sales can slide into the role easily and understand exactly how to sell, who they're selling to, what the process is, what the pipeline is, how do we work that pipeline. So it typically involves a team of individuals who understand what the owner's trying to accomplish, understand what the long-term goals of the organization is, and maybe they just maybe don't have an interest in sliding into that role, or they might maybe missing a few key pieces or understanding around what the capabilities are of the business in terms of size and scale, right? They're typically insiders who don't have an outside perspective, so that's where I think an outsider coming in could add some value. Additionally, love teams that are self-motivated, right? That are constantly challenging themselves to answer tough problems, and that's just a culture that's typically built by an owner. It's always asking ourselves, how can we be better? What sort of problems can we solve today, and being excited about solving that problem, not just getting to the line or barely over the line of delivering the service to the customer. So, and it's pretty clear delineation when you have a conversation. You can see it, you can feel it. It's a sort of a soft trait, but you can tell pretty quickly whether you have a team of problem solvers or whether you need to develop that a little bit more.
Right. I think you hit on a key point for our owners. There's businesses that are highly dependent on the owners and are it's a risky enterprise without the owner's presence. And there's something to having a business where the owner is a value add, where the owner is an injection of horsepower. It's the nitro to the engine that already runs.
Yeah.
And so a good call out there on that one. And from an owner's perspective, I'm sure they ask you the question. They've invested a lot of time, and this is likely one of the biggest transactions that they're going to be doing. At least most of my clients want to see their businesses be successful into the future. And so can you share a little bit about how you position yourself and your value add, and kind of how you taking over the business, a continuation of their vision, and maybe even pushing that further?
Yeah, it's different for every type of buyer. I think something that I personally try to do very early on is build trust, because it requires a different level of trust than your traditional financial buyer or strategic acquirer, because I'm literally going to be taking over their baby, taking over their team, and promising that I'm going to treat them well, right? So very different style. Something that I spend a lot of time on is just trying to understand the motivations of the owner. Obviously want to understand what they're doing, on the day of the close, but more importantly, want to understand how frequently, if at all, they want to check in. What sort of relationships do they have through the business? I spend a lot of time around the story development around the people. Right, having individual conversations with those people, with the professionals in the business. Obviously, when the time is right and the setting's right. But I do spend a lot of time trying to understand what operationally needs to happen, what have been the challenges before, on a uniquely personal level, as opposed to just slotting people into different places. I want to understand the people who have the knowledge that is sometimes hidden and not written down. We need to get that written down, right? But in a way that's going to help support them really bring a different level of skill to their job. Because they're the lifeblood of the business to this point, and in most cases, so they are some of the most valuable people to the business and the industry. And we need to make sure that they're well taken care of, well supported, and well enabled to drive the business forward.
Got it. And so we would be remiss if we didn't touch on financials. And as you're going through the process, there's an operating model, there's kind of industry dynamics, and I'm sure a lot of what we're touching on operationally here, there's an expectation that'll show up in the financials. And so if you can talk a little bit about, at a high level, the quality that your expectations around quality of financials, what you're looking at in the financials, and just give some perspective on how some of these core operating pieces of the business model show up for you in the financials and what you're looking for there.
Yep. So I've had a lot of conversations with owners who have, and I'll just be frank, financials are everywhere in terms of whether it's in QuickBooks. I've heard horror stories of like financials in a shoebox, basically. It always makes my life easier when there is a system being used. So to the extent that an owner has, is using QuickBooks or some sort of system they can easily generate reports, and I can, there's all sorts of new styles of reports that people will ask for, but to the extent that you can, get into some system, I think it'll make the entire process a lot smoother, easier, and help you answer questions and lose less sleep, frankly. Yep. I think the first thing I'm looking for are the last 3 years worth of financials on a monthly basis, meaning, revenue, expenses. I want to see EBITDA, gross retention rates of the software business. Typically like to see, if it's too early in the process, I understand customer lists are sometimes a sensitive area, and maybe that's something that can be visited later, but to an extent, an anonymized customer list where we can see just revenue aggregation. We just typically love to see highly fragmented revenues across the customer list. Right. Something I also like to see is trying to understand what industries those customers are in, if they're not in the same one, what sort of dynamics they're going through. Trying to understand what contracts look like, if there are specific contract lengths. But many of those items can be, pushed off until we're pretty certain there is a transaction to happen. Yep. I would say the first 3 to 5 years worth of financials and growth year over year, monthly revenue, EBITDA is the starting point and probably the most important part of the conversation.
And how important, so if we're looking, these are all established businesses that I understand you're looking for. Are you looking for growth year over year for the past several years? Are you looking for just a consistent level of performance? How do you kind of go through that process of evaluating what you're seeing?
Yep. So consistency typically trumps great years versus bad years. We love consistent base hits, doubles. But I will say that in particular to Goshen Park, we are looking for growing industries, and we think that our margin of safety is in the industry growth, right? Understanding that typically these owners have been in the business for a long time, and sometimes decades. They have more industry knowledge and frankly more experience managing within that industry than I have, right? So for me as a new leader of the entity, I want to spend a good amount of time trying to understand what that landscape is, trying to be mentored in some respects from that owner, and really trying to understand my team, right? So the only way to do that is if there's a rising tide that raises all ships.
Right.
You want to be able to if there is a mistake, and I don't want it to be a fatal mistake to my economic outcome. I want it to be a learning experience for the team so that we can all learn together and continue growing together. So I think the first thing that we're looking at is strong industry growth, at least 2 to 3 times US GDP historically. Yep. Ideally, we're looking for double-digit growth year over year in both revenue as well as profitability. there are trade-offs there based upon the industry. I think it's
Right.
specific to every industry and niche within the industry, and we're willing to discuss some of those trade-offs. But
Yeah.
generally speaking, double-digit growth is a good solve for most wounds, even in the early stage of the negotiation.
Got it. No, and that makes a lot of sense. And yeah, so I think that leads to another interesting point, right? We talk about the unknowns and potential risk. And so you touch on being new to the industry and what financial position does the business need to be in order to kind of mitigate potential risk on that side. And so we are in the world of COVID, and that's impacted everyone significantly. Had lots of conversations with clients around what that means. And so I'll just spend a couple minutes here, but if you can just talk about how COVID has impacted broadly how you're considering businesses and the risk profile of the individual entities and just how you feel as a person bringing capital to the table and stepping into the driver's seat in the midst of a crisis. Curious to get your perspective on that.
Yeah, it's interesting, the conversations that I've had throughout, the buyer community, with the buyers of all shapes and sizes and types. Everyone was really, really hesitant. Like everyone stopped, right? As everyone in the world did, stopped in Q1 2020. The processes that many of the buyers like myself went through was doing a little bit more deep research on particular industries and impacts downstream, right? So what that means is if we were in the middle of a transaction, it meant, hey, let's see how this plays out. So I'm sure there are some sellers who have gone through that and maybe a bit frustrated by the fact that the processes were extended. What that meant for Goshen Park in particular was we want to stop and take a look at the industries that we were thinking about evaluating and just do a deep dive, almost as if we were, again, an outsider, right? Like as if we were coming to it with fresh eyes. So we actually spent a good 2 or 3 months not reaching out to owners, right? We were continuing the conversations we were having. But in terms of new outreach, we really wanted to focus deeply on the industries that we thought were going to accelerate outside, after this process, so that we knew that we were in the right places. And frankly, some of the early outreach we did just wasn't the right timing, and it didn't make sense for us, nor did it make sense for owners, because they were so busy managing their teams and making sure that their employees still had jobs in many cases, or in the sad situation where they did have to contract their teams, how they were going to do so in a way that was sustainable and potentially bring those folks back. So many of the conversations I had in Q1 and Q2 of 2020 were, how can I be helpful? Here's what I'm having. Here's the conversations I'm having. Here's what I'm learning. Because I have better relationships, or a different sort of angle of relationship with banks and other lenders, it really meant putting together the PPP process for some business owners, like walking them through the steps, trying to show them what impact it might potentially have on their business over the next year or 2 or 3 years, but also, and to a lesser extent, how that's going to impact me as a potential buyer or acquirer. But in some cases, we did talk about that. But I think most of everyone's focus was, how can we be helpful in ensuring the backbone of the U.S. economy, being lower middle market businesses, it can survive and ultimately thrive through COVID-19. So I think, I don't know if I answered your question, but I think that now the conversations have somewhat changed, and I'm starting to see, owners think a little bit more about, hey, do I want to really go through another situation like this? The conversations have been, what sort of contractual recurring revenue are important to us. Like that's something that's really important to us now, is not just recurring or reoccurring revenue, but is it contractual? Some of the considerations that my team has is, if an organization did take a PPP loan, and it's not a deal breaker, it's, well, what does that what does that mean for our potential liability if we're in the business? What if it's not forgivable? What if there was a payroll tax deferral? And how do we treat that in a potential transaction? Do we typically put it in escrow, right? Is it a dollar for dollar exchange? So those are the additional considerations, but I think the core is still, is it a potential growth market, even if 2020 didn't turn out the way folks projected it to go? And in most cases, it's, if there was an acceleration through 2020 because it wasn't a positive impact on the business,
Right.
well, then do we need to be putting more stock into 2019 and what to expect out of 2021? So it's not a deal breaker to be impacted by COVID in the first quarter of this year. And in fact, most businesses were, but it's, let's not take an opportunity to stick it to sellers in terms of valuation. It's, let's understand the fundamentals of the business and what we can expect to come when we come out of the situation.
Well, so just to push on that a little bit on the valuation perspective, right? The risk exists. So even with contractual relationships, the risk. So we're having a resurgence here in San Antonio, Texas, or our first kind of go at it, in 2,200 cases in the county yesterday. And so, when you look at kind of the potential tail on this, how do you think through the potential risk that you take on moving into a business, assuming that PPP can even be forgiven, the contractual relationships are there. We don't know if the economy is going to all rebound in the next 2 or 3 months, or if it's going to be 6 months or 8 months. How do you then dial that into your analysis? Or do you say, hey, based on past performance, we believe this is going to rebound, and you go out, place your bet, and move forward?
So we do take into consideration. I think the main consideration is it delayed demand, or is it demand that has completely gone away, right? And is not returning anytime soon. So if it's delayed, then initially I think many individuals thought that July 4th, right, that we were going to be through this and the economy returned somewhat back to normal. And now we're seeing some different information. If it's delayed demand that will eventually return, and it's not dependent upon schools opening or bars opening or things of that sort. It may just be a policy decisions or some other adjustment to how people engage with the business. That's something that we think very positively about.
Got it.
If it's demand that is reliant upon, let's say if it's bars opening and we have a POS software system that isn't being used because bars are not open, that's a little bit of a different situation and significant. So that's sort of how we think about the dichotomy about how we think about it.
That's real helpful. And I'll just call out for those owners out there. I've got a client right now who actually is having the best year ever. And we're working on getting the business sold. But what happened was this exact dynamic of pent-up demand. So the demand for the services went away during stay-at-home, and all of that demand unleashed on the business once things opened back up. And they had the first month in May when things reopened, had the best month ever in 11 years of the company. And so to that point, that is one thing to keep an eye on. And I just throw out there for owners as well to consider the business model and where there are opportunities for new growth, what potential lines of business are at risk, and how do you position your business to be resilient? Do you double down on what's really core, and do you kind of understand these concepts of where is the business going to be as we come out of this? Because we will. We have no other choice, right? Our economy will come out of this, and things will be better in the future. The last thing in the COVID, BJ, I'd like to get your perspective on is leases. And so for those business owners that are in a lease, I've had several conversations around abatement and deferment, and from kind of the perspective of its implications on a deal, if there's a deferment that gets pushed out to the end of the lease term, how do you think about that? Or is that kind of a detail that you manage on a kind of one-off basis?
It's definitely a case-by-case basis. Certainly not a deal breaker. I think one consideration is how important is that real estate to the success of the business. And I think that's what every industry is having, and in some cases, a shock to their system to understand that, hey, maybe we don't have the same real estate needs that we thought we had,
Right, right,
or thought we needed to be
right,
successful. So I think that's more of a conversation about how do we continue to expand this business in the new world. Um, and in some cases where the real estate it's definitely necessary, well then liquidity is paramount right now, and being able to pay the bills that are absolutely necessary and only those bills necessary, and pay
right,
people, and continue keeping the business open. I think that is something that I've had lots of conversations with my advisors about. Is that's what they're telling their CEOs is liquidity is king right now. Liquidity gives you flexibility and optionality. So to the extent that you can work with leasors, that is something that's certainly not a negative thing in our perspective. It just needs to be managed. We need to be thinking about what that would look like, and ultimately what the needs would be for the business in 2021 and beyond.
nice, nice. BJ, I really appreciate it because part of what I see in my space is the focus is not always around value creation, right? And so right now it's all about keeping these businesses running, keeping them kind of on track. Sale, not sale, all that gets kind of figured out as we move along. And so would love to get your perspective on advice, and whether this is relative to COVID or just more in general. What advice would you provide to owners? Again, you as being the customer that's ultimately going to kind of buy the business. Advice, coaching, tips that you would give to owners out there from your perspective?
Uh, I would say taking care of the team, and not having a lot of attrition, if you can, in this space is critical. I think uh, I'll give you one story, what I mean by that. I had a conversation with a potential target, in which they were able to, give bonuses to their employees. It was a minor one, but it was something that was so thoughtful,
Mm,
by the ownership, and it meant a lot more to the team given that some of the difficulties that individuals were feeling throughout the organization, and it was in direct contrast to all the bad news they were hearing in April, all the things that they were seeing in the news, all the things that they were witnessing with family and friends. And in some cases, there's an individual who was going through not just COVID, but also the flooding in Michigan, and was able to take time, because of that bonus, additional time to help their community. Right.
right,
So
right,
stuff like that it's not going to show up on financials. It's not going to show up necessarily in the negotiating table.
right,
It's going to come through in the stories that I talked about, in the conversations. And that's what's going to stick out to me as someone who is thinking about stepping into a business and really trying to understand what the unique dynamic between, growth is. It's typically the people, and in addition to the business model and all of those things,
right,
it'd be a terrible situation to step into what I thought was a great business and have some key employees walk out the door because they were afraid, scared,
right.
concerned, didn't felt valued, when in fact they were probably some of the most valuable people in the business and in the team, and could really help drive the business forward just by their presence and knowledge and culture. So take care of people because it goes far.
Right.
Think hard about the business model. Think hard about what your customers need, and be problem solving, and try to build that culture before a potential buyer comes knocking.
Yeah, great. No, appreciate it. And that's one of the things so that's our focus is on how do we unlock that value. And part of what we're hoping to accomplish through this conversation is to provide some insights to sellers or to owners who may be potential sellers in the future of what things to be thinking about. Culture change and shift doesn't happen overnight. Building the bench strength and the team doesn't happen overnight. These things take time. And ultimately, whether an owner decides to sell or not to sell, actually implementing these things are just fundamental value drivers for the business. and position the business to be successful long term. BJ, really appreciate the time. Do you have any final thoughts? Would also love to hear if there's anything that you'd like our owners out there to hear from you. Last words?
Last words to think hard about as you're thinking about exit the business, whether it's next year, 3 years, 5 years from now. Think a lot about what is important to you, what you want for your team. It's obviously in many cases more than just about the dollar number of the offer, but think about what structure looks like, what your motivations are, what you want for your team, and ultimately what you want for yourself in terms of potential upside. Because some transactions are flexible and can give both you and the buyer what they ultimately want. So it's not it can be it's sometimes not a zero-sum game. Sometimes it can be value creation for both buyers and sellers.
Yeah, and that's what we always hope for. BJ, thank you so much for the time. I hope you and the family stay safe. Best of luck on your continued search for the right business to buy, and look forward to catching up again soon.
Same here, Jason. Thank you very much.
Thank you.
Best of luck.
Take care.